Get this, in December 2021, it took less than 12 ETH to buy one Bitcoin, but now it costs over 40 ETH to get one Bitcoin. What is going on? Well, one of the biggest bets in history is taking place before our eyes. President Trump announced ETH will join the US Strategic Crypto Reserve, and Goldman Sachs is accumulating $450 million in ETH ETFs, all while the Trump family bought $266 million worth of ETH through World Liberty Financial. So clearly, there is no in between here. This will go down as one of the best or worst plays of all time. Hey everyone, I'm Josh from Coinsider, and today we are going to discover which side of this trade has the best chance to pay off. And we'll break down the pros and the cons so we can decide, is it finally time to buy ETH? First of all, big money is flowing into ETH. And when I say big, I mean big. World Liberty Financial, a DeFi project linked to the Trump family, has been aggressively accumulating, buying over 78,000 ETH worth $266 million at an average price of $3,400 per ETH. And they're not keeping it a secret. Eric Trump has openly praised Ethereum, saying that it's a great time to buy right now, but there's way bigger news than even just that. I mean, President Trump himself announced that Ethereum will be part of the US government's new strategic crypto reserve. So if one of the most powerful families in the world are bullish, then maybe we should be too. But it's not even just the Trumps. Goldman Sachs has scooped up $450 million worth of ETH ETFs. And the biggest Ethereum whales have accumulated over 670,000 ETH in February alone, all while the supply of ETH on exchanges has dropped to just 6.38%, which is the lowest ever. So big players are clearly putting their chips on the table and their money where their mouth is, but is that enough? Well, the next thing to consider is the ETH ETF itself. Since February, $394 million has flowed into ETH, while Bitcoin has seen outflows of $376 million. Just think about that for a sec. Here's where things get even more interesting. Stake ETH ETFs are on the horizon. 21 Shares has proposed a staking-enabled ETH ETF, which is the first of its kind in the United States. And if approved, it could bring 2 million ETH into staking, therefore tightening its supply and likely driving more demand. Analysts predict that ETH ETFs could hit $19 billion in assets, adding $9 billion in new demand, which is essentially Chainlink's entire market cap. So truly, if the ETH ETFs start offering yield, then even I'd be personally interested. And I mean, geez, who knows? Maybe even Warren Buffett would be too. Like, we know how much he loves his dividends. So at the end of the day, the fundamentals are seemingly strong. So what are the charts telling us about ETH? Well, right now, the ETH Bitcoin ratio is sitting at historical support levels. Generally, this signals a bottom and an upcoming trend reversal. So think about this. If the ETH Bitcoin ratio was at the same level as it was when FTX collapsed, ETH would be worth over $7,000 right now. And when we look at the indicators, this is only the fourth time ever that the weekly RSI has hit oversold levels. And all of this is happening while Bitcoin dominance is forming what looks like a double top. So if Bitcoin dominance starts to break down, we would expect to see a major rotation into altcoins with Ethereum leading the way. I mean, all of these are potential catalysts, but the biggest might be this. The Pectra upgrade, which is coming out mid-March, could very well be a game changer for Ethereum. It's going to double the blob target from 3 to 6, but essentially this upgrade will improve the data availability and lower the fees for layer 2s in the entire ecosystem. So it will drastically improve the user experience. And it'll also raise the validator staking limit from 32 ETH to 2,048 ETH, which makes staking operations way easier as well. So these are all bullish. And at the same time, the Ethereum Foundation has started to stake their ETH and put it into DeFi protocols to generate yield instead of simply dumping it to fund their normal operations. this means that there will be less selling pressure and more liquidity in DeFi protocols on the chain, both of which is better for the broader ecosystem as a whole. And also, let's not forget Ethereum's dominance in the real-world asset sector too. ETH accounts for 52% of all on-chain real-world assets. And BlackRock launched their $100 million tokenized fund on Ethereum. So if RWAs are the future, then Ethereum is already at the center of that narrative. So after all of that, you might be feeling super bullish on ETH. And I mean, you might be already hovering over the buy button right now. But before you do, you've got to hear the other side of the argument, because sure, the bullish case is good, but there are some serious risks that you have to consider. First of which is ETH's monetary policy. So the Ethereum merge was supposed to make ETH deflationary, but in reality, it has actually been inflationary. Since the merge, more ETH has been issued than burned, leading to a net inflation of over 33,000 ETH. And that's a problem because it weakens the ultrasound money argument that ETH maxis love to make. And compared to Bitcoin's fixed supply, it's just not a great look. Then there's the question of adoption. Despite all the hype around DeFi, the total value locked on Ethereum hasn't even surpassed its 2021 highs. That's a pretty big red flag considering all the new money that has flowed into the ecosystem since. DeFi is the narrative Ethereum most leads the market. So if DeFi adoption doesn't grow fast enough, it could mean that ETH's price is relying too much on speculation rather than real demand. And all of this is happening while competitors are gaining ground all around them. And another big issue that the Ethereum ecosystem has faced is its leadership. The Ethereum community has been loud about its frustration with the Ethereum Foundation's decision-making and lack of transparency recently. But here's where things might be turning around. The Ethereum Foundation recently announced a big leadership change. Longtime executive director Aya Miyaguchi is out, while Xiaowei Wang and Thomas Stanchek are in as co-executive directors. And also, longtime Ethereum developer Danny Ryan has joined Etherealize as a co-founder, and he's been tasked with helping Ethereum on the institutional adoption side. So this could be the turning point for ETH. In fact, some ETH maxis have even added their .eths back into their handles after they removed it in protest of the Ethereum Foundation originally. But will this new leadership actually be the difference to U-turn this downtrend? I mean, maybe, but there's still one big problem. Now we have to talk about the parasitic relationship between Ethereum and its layer 2s. You see, on paper, L2s are great. They make transactions faster and cheaper for users across the entire ecosystem, but they also pull value away from Ethereum and ETH itself. The sequencer profits, aka the fees that L2s charge users, mostly stay with the L2 operators, not ETH holders. As Andre Cronje put it, BL2, have centralized sequencer, generate 120 mil in fees, pay Ethereum 10 mil for security, dump 110 mil for profit. It's pretty straightforward. And Vitalik Buterin even recently proposed in a blog post that the Ethereum ecosystem needs to cement ETH as the primary asset of the greater Ethereum economy and support applications using ETH as the primary collateral. So it's been a big time discussion in the Ethereum community across the board. So while L2s are essential for scaling and building the ecosystem, they very well may be hurting ETH's price. So there's a lot to break down there, but after weighing all these pros and cons, what's the final verdict? Well, Ethereum's been declared dead like 61 times in the past 3 years, and yet it's still standing strong, and it's really the foundation and backbone of Web3. So despite the countless setbacks, ETH's price has been really resilient, down only 10% over this period. And with significant institutional buying, bullish technical signals, promising network upgrades, fresh leadership, and a call for renewed tokenomics, ETH really could be set for a major comeback here in the future. So to me, the risk-reward scenario looks promising, but timing really is everything with an entrance here. So if you're planning to scale into ETH, do it cautiously and be prepared to turn aggressive once the market clearly shifts into bullish structure. So now, what do you think? Is it finally time to buy ETH? Let me know your thoughts in the comments below. And also, our channel partner 3 Commas is having a trading competition with Bybit. The prize pool goes up to 105,000 USDT. So if you're curious to learn more, then just check out our links in the description.